Well, thanks for joining today. Just in case no one has heard of you, which is highly unlikely, can you just say who you are, what you do?
Sure, and I'm Ashraf and of ashraflighty.com. I started my company Intermarket Strategy Limited after having spent over 4 years with CMC Markets. And probably people know me best with my inter-market analysis applications. Not only looking at the currency market through staring at a chart for 20, 30 minutes of a euro dollar or dollar yen and figuring out what's going to happen in the next 45 minutes or the next day, but in addition to that, basically looking at trying to get more assurance by looking at what the S&P is doing, or what gold is doing, what oil is doing, or what actually gold is doing relative to oil.
You realize the last time we met at Waterloo Station that the Nikkei fell 20% the next day. This isn't a bad omen, is it?
You are right. You are right. Oh, yes. Well, it was. How long ago was that? Well, around 6 months, you think, maybe?
No, well, I know because I'm still long from it. It was in March, 11th of March. In fact,
The 11th of March. Okay, okay. So yeah, that was just around the tsunami, and it was around not the interventions, but
the interventions followed shortly. It was one of the reasons why rally's so strong. It's back up 20%. But Ashraf, tell me, one reason I wanted to get together today was talk a bit about your trading philosophy, the principles, and how you create a trade, the anatomy of a trade. Do you have any particular philosophy?
Well, if I were to try to put it in words, how do these intermarket applications or work? Then again, look, I would look at, if we would start with a trade, let's say with the euro dollar, and let's say obviously always start from the top-down approach, always start from the weekly and then the weekly chart, zoom in into the daily chart, and then when there is a need, I will look at probably the 4-hour chart. I will look at that chart very well, first of all, by itself. Look at the technicals. Look at the oscillators. Look at the stochastics.
So your starting point is the technicals? Because that will surprise a lot of people. Most people see you as a great economist and you start with a fundamental approach and then say, okay, it's no good being right in the wrong market. This is the background why I think the euro dollar is going to strengthen. Because of all these various fundamental factors, dollar's going to weaken, and then you go to your chart. But you don't do that.
How many people do I have to convince that I look at technicals before I start looking at fundamentals? You look at the top-down approach. You look at the big picture. You look at the major dynamics. I'll get to the fundamentals in a bit. But first you got to look at the constraints. You got to look at the chart, at the price action. You got to look at the various schools or the various facets of technical analysis. I don't use Elliott wave like you do, but I would I would start with the weekly and I go with the daily chart. And when I say I look at the technicals, I look at the classic facets of technical analysis. I look at the trend lines.
Okay, so you start with the demand and supply and see how it's interacting in the chart, and then you break down the demand and supply fundamentally.
And what part of technical analysis? That's what's important. Do I look at the Fibonacci? Do I look at the oscillators? Do I look at the momentum? Do I look at the moving averages? What do I look? Do I look at the Bollinger waves? So I take one oscillator, so I look at the stochastics. I look at the moving average. That's always very important. I look at the 55 period moving average, period I said, because if it's a daily chart, it's 55-day moving average. I look at the 100-day moving average. I look at the 200-day moving average. If it's a weekly chart, then we look at these. No, I don't look at hourly moving average. I'm not too excited about that. So I look at the way, at how these are interacting. I look whether the market is afraid, is respecting, is eager to break above one of these key moving averages. And you would be mad. No, you would be mad to ignore these things. And for me,
So let's say your moving average, as I know your view, you think the euro is going higher or have thought it last 2 or 3 days, it's giving you a buy signal. Okay, now that's the technicals, saying you should be buying this level for a particular price target in the next 2 days. Now, where do the fundamentals fit into that?
Okay. First of all, I see. First of all, if there's any impending fundamentals in the next, or before I get to the fundamentals, hold on here. Before I get to the fundamentals, what I look at the responding, the reconciling technicals in other assets, in other instruments. Okay. So one of the great judge of risk appetite for me, it would have to be the S&P 500.
Yep, without a doubt.
So I have to look at that. I mean, some people can say, why don't you look at Aussie yen? Why don't you look at Euro yen? Why don't you look at the Dow? Well, you look at the S&P 500. It is used as a benchmark. So I'm not getting to fundamentals yet. I look at the technical picture in the euro dollar.
So you start off with one market, let's say obviously the euro dollar in this instance, and then you look for the risk appetite reflected by the S&P and the surrogates. I mean, euros.
Whether it confirms that, it confirms, if I see something, if I see an obvious positive dynamic in the euro dollar within the next 24 hours, as seen by the 4 hour or by the daily chart, I want to see whether that signal is better reflected or is confirmed by the S&P 500. You know what, and sometimes you don't get it. Sometimes you get a clearer signal from oil and from the S&P, then you get one in the euro. Okay? Mm-hmm. Some people say, wait a minute, you are assuming that whatever happens in oil or the stock market will happen in the euro. Are you assuming? Be careful. Well, yes, I am assuming. And I have to basically pinch myself and say, wait a minute, is this one of these days where it's going to be an exception? See, you have to look for the obvious chart, for the obvious signal that stares at you. If you don't, then you have to force yourself and say, well, there is nothing obvious. And then you have to ask yourself, are you forcing yourself to get into a trade?
Okay.
Sometimes the best trade is not to do one. I don't want to force myself in doing one. But as days go by, I have a service. I have to give the signals. So sometimes I do. Sometimes what do I do? Sometimes instead of saying long euro dollar at 139.80, at 143.90, instead of saying long euro dollar at 143.90 for a take profit at 144.60, I say, well, buy here, sell here, put a stop here, and then once it gets to 80, 90 pips profit, then you want to issue another sell, a sell order. Not another sell, but a sell order.
So your starting point is clarity. That's, I mean,
yes, you have to
let the chart, and it is the chart. It's not the back page of The Economist or whatever you read. It's the chart. You start with the clearest chart you can, and then you identify what that chart is saying given the price action, given a whole range of different technicals. Then you look for confirmation. If it's a risk-on trade, then obviously you need the support of the S&P, is what you're saying, S&P 500, to give you that confirmation is working behind the euro. And then you look at the surrogates like euro, yen, oil, gold, whatever comprises the risk-on basket at that particular time. And then it's a go.
Which of these surrogates, as you say, could give me a clearer message?
And if it's clearer, if it's clearer, let's say a euro Swiss, because everyone knows I've been bullish euro Swiss. So you look at the euro and you think the euro is going higher, and you look at euro Swiss and you say, wow, euro Swiss, that is where I should be long. So would you go long euro Swiss rather than the euro? Or would you, like me, has a tendency to want to be in everything? Would you do both?
That's a good question. No, I'll try to put my finger in the best from what I see, not the best there is, because I can only look at some things. And but sometimes I look at the sterling dollar, at cable. Sometimes I look at dollar yen. Now, dollar yen is a bit tricky because its correlation with risk appetite is not that straightforward.